Hey everyone, and welcome back. Today we're going deep on a topic that I think we can all agree is pretty important to understand at least the basics of, but can often feel really complicated.
Insurance.
Yeah, it's one of those things you don't really think too much about until you need it, right?
Exactly. And when you need it, you really need it. So today we're using this document called Basic Principles, Nature, Legal Concepts of Insurance to guide our deep dive. And by the end, hopefully you'll feel a bit more confident in navigating the insurance world, from understanding all the different types of companies to wrapping your head around all the legal stuff.
Right, because sometimes it can feel like you need a law degree just to understand your insurance policy.
Haha, I know, right? All right, so let's start with the fundamental question. What exactly is insurance?
Well, at its most basic, insurance is a way to transfer risk. It's kind of like a giant risk-sharing pool.
Okay, so like we're all shipping in together.
Exactly. You pay a premium to the insurance company, and in exchange, they agree to cover certain losses if they happen. It's peace of mind, basically.
Okay, that makes sense. But there's also this idea of indemnity, right? Like you're not supposed to get rich off of an insurance claim. It's about restoring you to where you were before the loss.
Right. Indemnity is a super important principle in insurance. It prevents people from trying to profit from unfortunate events and helps keep premiums fair for everyone.
Gotcha. So let's talk about the different types of insurance out there. I know we have private companies and then there are government programs, right?
Yeah, you've got your commercial insurers, the ones you see advertised all over the place. They offer a wide range of insurance products, from car and home insurance to life insurance and health insurance.
And then on the government side, we've got programs like Social Security, Medicare.
Right. Those are social insurance programs designed to provide a safety net for certain groups of people.
And I think even the military has its own life insurance program.
Exactly. Things like SGLI and VGLI.
Okay, so there are a lot of players in this world. Let's focus on those commercial insurers for a second. There are different types, right? Like stock companies versus mutual companies.
Yeah. So with stock companies, the company is owned by shareholders, and their main goal is to generate profits for those shareholders.
Okay, so it's like any other publicly traded company.
Right. They issue what are called non-participating policies, which means that policyholders don't share in the company's profits.
Gotcha. So what about mutual companies?
Well, mutual companies are owned by their policyholders.
So if you have a policy with a mutual company, you're actually a part owner of the company.
Exactly. And because they're owned by the policyholders, mutual companies often distribute any surplus revenue they have back to their policyholders in the form of dividends.
So it's a bit more like a co-op, I guess?
Yeah, you could say that. It's a way for policyholders to share in the success of the company. And then, of course, you have all sorts of other players in the insurance world, too, like reinsurance companies. They basically insure other insurance companies.
Whoa! It's insurance for insurance companies. Okay, that's a lot to take in. Let's move on to what actually happens inside an insurance company. I mean, there must be a lot going on behind the scenes to make this whole thing work.
Right. There are several key departments in a typical insurance company. You've got marketing and sales, of course, which is all about attracting new customers and selling policies.
Makes sense.
Then you have underwriting, which is where they assess the risk of insuring someone or something and decide whether to issue a policy and how much to charge for it.
I bet the claims department gets pretty busy.
Oh, yeah, that's where all the action happens, when someone actually needs to use their insurance. They handle the investigations, process the paperwork, and make sure claims are paid out fairly and efficiently.
It sounds like a pretty complicated process.
It can be, yeah. And then you have the actuaries. They're like the math wizards of the insurance world.
What do they do?
Actuaries use all sorts of data and statistics to calculate things like risk and premiums. They're the ones who crunch the numbers to figure out how much to charge for different types of coverage.
Oh, so they're like the fortune tellers of the insurance world.
Yeah, something like that. They use their expertise to predict future losses and make sure that the insurance company can stay financially stable.
So let's talk about the folks we often work with directly. Insurance agents. I know there are agents and then there are brokers. What's the difference?
Good question. So an insurance agent typically represents a specific insurance company, or sometimes a group of companies. They're the ones who can actually sell you a policy.
So if I walk into, say, a State Farm office, the person I talk to is an agent for State Farm.
Exactly. A broker, on the other hand, is more like an independent advisor.
So they don't work for any particular insurance company.
Right. They can shop around and compare policies from multiple companies to find you the best deal.
So if you're not sure which company to go with, a broker might be a good option.
Yeah, they can help you weigh the pros and cons of different policies and find one that meets your specific needs.
Okay, that makes sense. Now, let's shift gears a bit and talk about risk. It's really at the heart of why insurance exists, right?
Absolutely. But not all risks are insurable.
How so?
Well, for example, if you invest in the stock market, there's a chance you could lose money. But that's considered a speculative risk. There's potential for gain as well as loss.
Oh, I see.
Insurance focuses on pure risks, where the only possibility is loss. Things like car accidents, house fires, or illnesses.
So there's no chance of making money from those events, only losing money.
Right. And even then, not every pure risk is insurable. For a risk to be insurable, it has to meet certain criteria.
Like what?
Well, it has to be due to chance, meaning it's outside the insured's control. It needs to be definite and measurable. The insurer needs to be able to assess the potential cost of a loss. And it can't be catastrophic in nature.
Catastrophe.
Yeah, like a widespread natural disaster or a pandemic. Those events are so large scale that they can overwhelm even the biggest insurance companies.
Okay, that makes sense. So how do insurance companies deal with people who are more likely to file claims? Like, if someone has a history of car accidents, wouldn't they be a riskier customer to insure?
That's a great question, and it brings up the concept of adverse selection. It's this tendency for people who are more likely to experience a loss to seek out insurance more than people who are less likely.
So how do insurance companies deal with that?
Well, they use a process called underwriting to assess risk. They look at factors like your driving record, your age, your health history, all sorts of things. And based on that assessment, they decide whether to insure you and how much to charge you.
So it's like a balancing act for them. They want to attract customers, but they also need to manage their own risk.
Exactly. All right, let's talk about some key terms: perils, losses, and hazards.
Okay, I'm ready. Those terms always get me confused.
Yeah, they sound kind of similar, but they have distinct meanings in insurance. A peril is the cause of a loss.
Okay, so like if a tree falls on my house, the tree falling would be the peril.
Exactly. The loss is the actual financial impact of that peril.
So the cost to repair the damage to my house would be the loss.
Right. And there are different types of losses, too. A direct loss is the immediate result of the peril, like the damage to your house from the falling tree. An indirect loss, or consequential loss, is a consequence of that direct loss. So if you have to live in a hotel while your house is being repaired, that would be an indirect loss.
Okay, that makes sense. And hazards are the things that increase the likelihood of a peril occurring.
Right. Like if you leave your car unlocked in a bad neighborhood, that would be a hazard.
Oh, right, because it increases the likelihood of your car being stolen.
Exactly. There are a few different types of hazards, too. Physical hazards are tangible conditions that increase risk, like icy roads or faulty wiring. Moral hazards are based on someone's character. Think of someone who intentionally damages their own property to file a fraudulent insurance claim.
Oh, wow, yeah. And then you mentioned morale hazards earlier, right?
Yeah, those are like careless behaviors that increase risk, like leaving your car unlocked or not wearing your seatbelt.
Okay, so insurance companies are considering all of these things perils, losses, and hazards when they're figuring out your coverage.
Exactly. It's a complex calculation, but understanding those terms can help you make smarter decisions about your own insurance.
So we've talked about risk management, like avoiding risks, reducing risks, retaining risks. But insurance is all about transferring risk, right?
Yes, transferring the risk from yourself to the insurance company. And there are a few other ways to manage risk too, like sharing or pooling risk. It's kind of like how insurance itself works.
Oh, right. It's spreading the risk out among a group of people.
Exactly. Reinsurance is another example. That's where insurance companies share risk among themselves.
It's like a giant network of risk sharing.
That's a great way to put it. And remember, the best way to manage risk is often to prevent it in the first place.
Like wearing your seatbelt or installing a security system in your home.
Exactly. Prevention can save you a lot of headaches and money in the long run.
All right, let's dive into the legal stuff now. Insurance contracts. They can be so confusing. Why are they so important?
Well, an insurance contract is a legally binding agreement between you and the insurance company. It spells out exactly what's covered, what's not covered, and what your rights and responsibilities are.
So it's like the rule book for your insurance policy. What are some key elements of these contracts that everyone should know about?
Well, first of all, for a contract to be valid, it needs to have what are called competent parties. That means everyone involved needs to be legally capable of entering into the agreement.
So you can't sign an insurance contract if you're a minor or you're not mentally competent?
Right. And the contract also needs to have a legal purpose. It can't be used for something illegal.
Makes sense. What about the offer and acceptance part?
Well, with insurance, your application and your payment of the premium is considered the offer. The acceptance happens when the insurance company issues the policy.
Okay, so it's like a two-way street. I'm offering to pay premiums, and they're offering to provide coverage. What about consideration? I remember that word from contract law class in college.
Uh-huh. Yeah, consideration is a key element of any valid contract. It means there's an exchange of something of value. In an insurance contract, your premium payments are your consideration, and the insurance company's promise to pay benefits is their consideration.
So we're both bringing something to the table.
Right. Now, insurance contracts have some unique features compared to other types of contracts.
Okay, like what?
Well, for one thing, they're what's called aleatory contracts. That means there's a potential for an unequal exchange of value.
So like I might pay premiums for years and never file a claim, or I could have a major loss right after getting coverage and receive a big payout.
Exactly. And they're also contracts of adhesion, which means the terms are pretty much set by the insurance company. You can either accept them or walk away.
So there's not a lot of room for negotiation.
Not really, no.
Yeah.
But the good news is that if there are any ambiguities in the contract language, courts will usually interpret them in favor of the insured.
Oh, that's good to know. It shouldn't be a guessing game when it comes to your insurance coverage.
Right. Another thing about insurance contracts is that they're unilateral. That means only the insurance company makes a legally binding promise.
So I'm not legally obligated to keep paying premiums.
Correct. You can cancel your policy at any time, but as long as you do pay your premiums, they're bound by the contract to pay out benefits if a covered loss occurs.
Gotcha. Are there any other unique characteristics I should know about?
Well, there are also conditional contracts, meaning the insurer's obligation to pay depends on certain events happening.
Okay, like what?
Like if you're in a car accident, you'll need to file a police report and provide proof of the damage to receive benefits. You have to meet certain conditions.
Makes sense.
And you mentioned valued and indemnity contracts earlier.
Oh, right. Can you remind me what the difference is?
Sure. A valued contract pays out a fixed sum, regardless of the actual loss. Think of a life insurance policy that pays out a specific death benefit.
Okay, I get that.
An indemnity contract, on the other hand, reimburses you for the actual amount of your loss.
So if my car is totaled, they would pay me the actual value of the car, not just a set amount.
Right. It's important to know which type of contract you have.
Okay, good to know. What about insurable interest?
That's a really important concept. It means you have to have a financial stake in the person or property you're insuring. You can't just go out and insure anyone or anything.
So I can insure my own house, but not my neighbor's house, unless I have some financial interest in it.
Exactly. That's to prevent people from using insurance as a form of gambling.
Okay, that makes sense.
All right, let's talk about utmost good faith. This is huge in insurance.
Okay, fill me in.
Basically, both you and the insurance company have to be honest and transparent with each other.
So no hiding information or trying to be sneaky.
Right. You need to disclose any relevant information that could affect the insurer's decision to cover you, like pre-existing medical conditions if you're applying for health insurance.
And the insurance company needs to be upfront about what they cover.
Right, absolutely. They have to explain the policy clearly and make sure you understand what's covered and what's not.
It sounds like it's all about building trust.
It is. And if either party fails to act in good faith, it can have serious consequences.
Okay, let's talk about some specific legal terms now. Warranties, representations, concealment, and fraud.
Sure. So a warranty is a statement in the contract that's guaranteed to be true.
And if it turns out to be false?
It could void the contract. Like if you say you've never had a DUI on your car insurance application, but it turns out you have, they might deny coverage if you get into an accident.
So be honest.
Always. A representation is a statement that you believe to be true to the best of your knowledge.
It's not a guarantee, but you're still expected to be truthful.
Exactly. And concealment is when you intentionally withhold information that could affect the insurer's decision.
So it's not just about being truthful, it's also about being forthcoming.
Right. Like if you know you have a history of heart problems, but don't disclose that when applying for life insurance.
That would be a big no-no.
Definitely. And then there's fraud, which is when someone intentionally lies to get money from an insurance company. That's illegal and can have serious consequences.
So lots of legal stuff to be aware of.
Yeah, insurance contracts are complex. But understanding these terms can help you avoid problems down the road.
Okay, let's shift back to those insurance agents we were talking about before. We talked about the difference between agents and brokers, but there's also this whole legal thing called the law of agency that governs their relationship with insurance companies.
Right. The law of agency basically outlines the agent's authority and responsibility.
So what can they legally do on behalf of the insurance company?
Well, there are a few different types of authority. There's express authority, which is specifically granted to them in their contract with the company.
So that's their official job description, basically.
Yeah, exactly. Then there's implied authority, which is a bit more nuanced. It covers those things that are reasonably necessary for them to carry out their duties.
Okay, can you give me an example?
Sure. If an agent is allowed to sell you a car insurance policy, they have the implied authority to collect the premium from you, even if that's not specifically mentioned in their contract.
Oh, that makes sense. It just goes with the territory.
Right. And then there's apparent authority. This one's tricky. It arises when the insurance company's words or actions create the appearance that the agent has certain powers, even if they don't actually have them.
Oh, so it's more about perception than actual authority.
Exactly. For example, let's say an insurance company advertises that their agents can provide instant coverage. If a customer relies on that ad and the agent provides them with coverage, the company might be bound by that agreement, even if the agent technically didn't have the authority to do it.
That seems like it could cause some problems.
It definitely can.
Yeah.
So it's important to be aware of these different types of authority. And remember, both the agent and the company have a responsibility to be clear and transparent with you about what they can and can't do.
And the agent has a fiduciary duty, right?
Yes. They have to act in the best interests of both the insurance company and the client. It's a balancing act, for sure.
And they often have errors and omissions insurance to protect themselves.
You know insurance, yep. It
Yeah.
covers them if they make a mistake or give bad advice to a client.
It's like a safety net for the insurance professionals themselves.
Right. Because even experts make mistakes sometimes.
All right, so we've covered a lot of ground today. From basic insurance principles to all this legal stuff and the roles of different professionals in the industry.
Yeah, we've really dived deep.
It's been a lot of information, but hopefully it's been helpful.
Absolutely. The more you know about insurance, the better decisions you can make about your own coverage.
So, what are some of the biggest challenges facing the insurance industry today?
But one of the biggest is definitely keeping up with technology.
Technology? How so?
Well, think about artificial intelligence, big data, the Internet of Things, even self-driving cars. All of these things are changing the game for insurance. Companies need to figure out how to assess risk and provide coverage in this rapidly changing world.
It's a whole new landscape for them.
It is. And then there's cybersecurity.
Ah, yeah. That's a big one these days.
Right. As insurance companies become more reliant on technology, they also become more vulnerable to cyber attacks.
I guess hackers are always looking for new targets.
Exactly. And when you're dealing with sensitive customer data, you need to have top-notch security.
It's a big responsibility. Are there any other major challenges they're facing?
Oh yeah, definitely. Climate change is a huge one.
Oh, right, because extreme weather events are becoming more common, which means more claims?
Exactly. And as the climate changes, we're seeing new types of risks emerge that insurance companies need to figure out how to cover.
It's a big problem for everyone, not just the insurance industry.
It is. It's a reminder that insurance is connected to so many other aspects of our lives and the world around us.
Okay, so for all of us regular people out there who are just trying to understand our own insurance needs, what's the most important takeaway from all of this?
I would say the most important thing is to educate yourself about the basics of insurance. Know what kind of coverage you need, read your policy carefully, ask questions, don't be afraid to shop around and compare prices. And if you're ever feeling lost or overwhelmed, reach out to a trusted insurance professional for help.
That's great advice. There's so much to learn, but taking it one step at a time can make a big difference.
Absolutely. And remember, insurance is there to protect you and give you peace of mind. Don't let the complexities scare you away from getting the coverage you need.
Great point. Thanks for joining us on this deep dive into the world of insurance.
It's been a pleasure.
And to all of our listeners out there, keep learning and keep asking questions. Until next time.
So before the break, we were talking about agents and all the legal stuff that goes along with that. But there's another legal concept that's important to understand, especially when it comes to claims. Subrogation.
Subrogation. Okay. I don't think I've heard that one before. What is it?
So let's say you're in a car accident and it's not your fault. Your insurance company pays for the damage to your car, but then they have the right to step into your shoes, so to speak, and go after the at-fault driver's insurance to get their money back. That's subrogation.
Oh, so it's like they're seeking reimbursement from the person who is actually responsible for the loss.
Exactly. It helps keep insurance premiums down because companies can recoup some of their costs this way. And speaking of legal stuff, we should touch on tort law, too, because it plays a big role in insurance as well.
Torts, yeah. I vaguely remember that from law school. It's basically when one person wrongs another person, right? But how does that tie into insurance?
A lot of insurance policies are designed to protect you from liability for those wrongs. Like if you accidentally injure someone or damage their property because you were negligent, your liability insurance might cover those costs.
Oh, okay. So it's like insurance for those oops moments in life when you accidentally cause harm to someone else.
That's a good way to put it. And there are different levels of negligence, too. Like simple negligence is just carelessness, but gross negligence is more reckless.
It's a reminder that our actions can have consequences, and insurance is there to help mitigate those risks. But insurance isn't just about protecting us financially, is it? There are ethical considerations as well.
You're absolutely right. We've been focusing a lot on the mechanics of how insurance works, but there's a whole other dimension of ethical questions that come into play.
Like what? Give me some examples.
Well, think about fair pricing, for example. Everyone should have access to affordable insurance, regardless of their background or circumstances, right?
Right.
But how do you ensure that while also making sure that insurance companies can remain financially stable?
Right. It's a tough balance. What else?
And then there's the question of access to coverage. Should everyone be guaranteed coverage, even if they're considered high risk?
Yeah, those are really complex issues. There are no easy answers.
Exactly. It's an ongoing conversation, and it's important to be aware of these ethical considerations as we talk about insurance.
Speaking of ongoing conversations, we've covered so much ground today. It feels like we've really gone deep on the world of insurance, from those basic principles all the way to these really nuanced ethical questions.
We have. But this is just the beginning, really. There's always more to learn.
So true. And the world of insurance is constantly changing, so it's important to stay informed and keep asking questions.
Absolutely. And ultimately, it's about making sure that insurance works for everyone, not just a select few.
Okay, so we've talked about a lot of challenges facing the insurance industry, like keeping up with all the crazy new technology that's emerging.
Right. Things like AI and big data are changing everything. And then there's the whole issue of cybersecurity.
Yeah, protecting all that sensitive customer data is a huge responsibility.
It is. And we can't forget about climate change.
Right. Those extreme weather events are becoming more frequent, which means more claims for insurance companies.
Exactly. And as the climate continues to change, we're likely to see new and unforeseen risks emerge. Insurance companies need to be prepared for that.
So, for all of us out there who aren't insurance experts, what's the key takeaway from all of this?
I think the most important thing is to be proactive. Educate yourself about the basics of insurance. Know what kind of coverage you need. Read your policy carefully, and don't be afraid to ask questions.
And shop around. Don't just settle for the first policy you come across.
Right. Compare prices, compare coverage. And if you're feeling lost, reach out to a trusted insurance professional. There are people out there who can help you navigate this stuff.
That's really good advice. Sometimes it feels like insurance is designed to be confusing, but there are resources available to help make sense of it all.
Exactly. Don't let the complexity scare you away. Insurance is there to protect you and give you peace of mind.
Okay, so we've explored a ton of ground in this deep dive into the world of insurance. We've talked about those basic principles, the legal stuff, the ethical considerations, and even the challenges that the industry is facing. It's been quite a journey.
It has, and hopefully our listeners feel a bit more knowledgeable and empowered now.
That's the goal. Thanks for joining us on this exploration of insurance.
My pleasure.
And to all of our listeners out there, keep learning, keep asking questions, and we'll see you next time. So we've covered a lot of ground in our deep dive into insurance, from how risk pools work to those oh-so-fun insurance contracts. But before we wrap up, I wanted to ask, what are some of the biggest challenges the insurance industry is facing today?
Well, that's a big question. But I think one of the biggest has got to be technology, right? It's changing so fast.
Technology in what way?
Well, think about things like AI and big data, the Internet of Things, heck, even self-driving cars. All of this stuff is forcing insurance companies to really rethink how they assess risk.
Yeah, it's a whole new ballgame for them, figuring out how to provide coverage in this rapidly changing tech world.
Exactly. And then there's the whole issue of cybersecurity.
Oh, right. Protecting all that sensitive data. It's a huge responsibility.
Huge. Especially as companies become even more reliant on tech to store and manage all that customer data. I mean, you hear about data breaches all the time. It's a constant battle to stay one step ahead of the hackers.
It really is. And it makes you wonder about what other challenges are lurking out there.
Well, one that comes to mind is climate change.
Oh, of course. With extreme weather events on the rise, insurance companies are on the front lines of dealing with the financial fallout.
Right. The cost of insuring property in high-risk areas is going way up. And it's a real challenge for them to figure out how to keep up. I mean, they have to develop new models to assess the risk, make sure they can pay out those claims.
It really highlights how insurance is so deeply connected to all these global issues.
Absolutely. And it's only going to get more complex as those global issues continue to evolve.
Yeah.
Consumers need to stay informed, understand how their insurance is affected by all of this.
Yeah, advocate for policies that make sure insurance is fair and transparent and affordable for everyone. Because in the end, insurance is about people, right? It's about protecting people from financial hardship when the unexpected happens.
Couldn't have said it better myself. And speaking of people, don't forget those insurance professionals. If you're ever feeling lost or overwhelmed, reach out to a trusted agent or broker. They can help you make sense of it all, find the coverage you need, all that good stuff.
That's a great reminder. It's okay to ask for help, especially when it comes to something as important as insurance.
Exactly.
Well, I think we've done a pretty thorough job of exploring the world of insurance today, wouldn't you say?
I think so. We've gone from those basic principles all the way to the complex challenges the industry is facing, the ethical stuff, you name it. Hopefully our listeners are feeling a little more confident in their understanding of insurance now.
I hope so too. Thanks for joining us on this deep dive.
It's been a pleasure.
And to our listeners, keep learning, keep asking questions, and until next time.